Я боюсь, это не сработает.
Are we live? Okay. Can we make sure I see it on the screen? I don't see it yet. Okay. All right. No, are we live already? I can talk? Yeah, we're good? All right, everyone. Welcome to live Q&A. We haven't done this in a while, right from the studios of New York City. So this is a live Q&A for all the business owners that want to save money on taxes. So this live Q&A is specifically for you, so you can ask any tax questions, and I, with the help of my whiteboard and Mariana here, going to answer your tax questions. Mariana is going to be reading out your questions, so make sure you put it in the chat. We're giving out a lot of things today, all for free. So we've got Thinking Outside the Tax Box book. We're giving out three of the S-corporation tax book. We're giving out mugs. We're giving out mouth pads. And whoever asks the most questions is going to get free Apple AirPods. All right. Unfortunately, I don't have a box to show off over here, but you guys can ask us questions. Any live questions, we welcome them. So right now, we're still loading the chat. So if you can hear us very well, Mariana, say hello.
Hi, can you hear me?
Yes, please let us know in the chat if you can hear us or if you can see us, because we operate based on what we see in the chat. So please definitely let us know. Right now, Mariana is having difficulties, right? Technical difficulties. Are we good? We're live? People hear us? All right. Awesome. But we need to be able to see your chat so we can see the questions.
The chat is here.
Okay, can we see it on that phone then? Are we able to see questions from that phone? If you're able to, yeah, I can walk over. Thank you so much. All right, awesome. Yes, this looks pretty good on the phone. All right, everyone, let's go. We got a live chat happening. All right. Let's see. Okay, guys, let us know in the chat if you guys have any questions. I think we still have people coming in. So again, this is live Q&A for business owners. You get to ask any tax questions, and I get to answer them for a tax strategy, so you as a business owner can start saving money on taxes. The biggest point right now of business owners is, hey, the 2024 tax year is over. Is there still something that I can do to save money on taxes? Let's talk about your situation. Ask us questions. Put it in live in the chat, and we'll be able to do that. Perfect. Let me get that from you. Thank you so much. Oh, yeah, and I'll give you back the phone. Here you go. This is working pretty well. Here you go.
Okay.
This is still not showing. Okay.
We have Zucchini live from California.
All right. Yes, by the way, please let us know where you're tuning in live. Let's get the YouTube chat going. For those of you that participate, like I said, we're going to be picking out your name. We're going to be giving you Thinking Outside the Tax Box, the S-corporation book, some mugs, and most importantly, we're going to pick a winner to get free AirPods, Apple AirPods. Okay. So yes.
I caught the issue. We were live on a different link.
Huh?
We were live on a different link. So we do have people watching, but this is where he just switched it over. So we are live.
We're live now.
Yeah, we're live.
We were not live before.
We were live on it through a different link.
Okay. Good. Are we good now? Yeah. Okay, very good. All right, guys. So welcome to the live Q&A.
But we are not live on Facebook.
Okay, welcome to... I love these technical difficulties. All right, we're going to
Sorry.
get it fixed. No worries.
This is the first time we're doing it, but I do have a question coming in. Guys, if you're watching,
Yes, if you're watching,
please
please let
say
us
hi
know.
in the chat. Let us know where you're watching from, and please subscribe.
Which do you need?
This one.
Yeah.
Yeah.
Perfect. Okay, awesome. TJ, I think the screen is also a little bit delayed. Yeah, okay, fine. I was told it's normal, then it's normal. Okay, cool. All right, we got a tax question. Mariana, let's go. Let's fire up those tax questions. For those of you that participate, today we're going to be picking out your name. You can get the S Corporation tax book for free. We're going to mail that to you, thinking outside the tax box, mugs, and most importantly, Apple AirPods. We're going to get one winner. You've got to ask the most tax questions. Mariana, let's fire away with those questions.
S. Chander, I remember this name from
I
the
got
last
it.
live.
Okay.
I bought a rental property in 2024. What tax strategy can I apply to save on taxes?
So Chandra said he bought a rental property in 2024. This actually goes back to what I just said earlier. Are there any tax strategies that you can do right now, this in 2025 for 2024 tax year? Now, if you've got a rental property, you absolutely can. Now, I'm not sure about the rest of your tax situation, if you are a real estate professional or if you're not a real estate professional, but generally speaking, what you can do is accelerate depreciation for rental property using a cost segregation study. Okay, cost segregation study. The name speaks for itself. Basically, there's a company that can take a look at your property and segregate its components, right? Based on the IRS tax code, the assets that go into building this house. There could be carpenting, whatever that may be, wiring, and breaking down into different classes of assets. Why is this important to you? Because regular depreciation for a property is 27.5 years. If you do cost segregation, about 25% of the property purchase value after subtracting out the land could be depreciated in its first year. Okay, using bonus depreciation, there is now limitations on bonus depreciation. Okay, but most of it can be depreciated quicker rather than later. And for 2024, the question I have for you: are you a real estate professional? What's considered by the IRS a real estate professional? Are you a real estate professional? If you are, then the losses generated by this rental property can absolutely offset your income. It can offset your other earned income if you've got a spouse that has an earned income or what's not. So really, really important for you to speak to your tax advisor about this. By the way, we got a lot more people joining in. Please ask away tax questions. I'm here to answer your tax questions, strategy questions to make sure we reduce down your tax bill. Anybody that participates the most, all right, Mariana's going to write your name on a paper.
Yep.
We're going to drop it into that mug. And then at the end, we're going to pick your name out so you can win one of these things on the table. And you can actually win multiple times. We're going to put your name back in there. And you get to have you get to win Apple AirPods. All right, Mariana, do we have more questions?
We don't have questions, but we have a hello from Kayla Bakuna.
Kayla.
Houston, Texas.
All right. Hello, Kayla. All right, guys, coming in, ask questions.
Caleb.
Oh, Caleb. Caleb. Hello, hello. All right, guys, coming in, ask questions. So was this the link that we sent out as well, or is this a different link?
No, it looks like this is a different link.
So let's take this link and send it out right now.
Yeah, Odie is sending it over.
Perfect. Got an amazing team here, guys. So
thank you,
let's
Odie.
do it.
Resurrection Life Church says hello from Buffalo.
Hello from Buffalo.
Please post your tax question.
Maybe people just want us to entertain them.
When life gives you lemons.
Which jokes can we say? Thinking of some jokes that our kids read to us from their 100 jokes book. Oh yeah, I've got a good one.
Oh yeah?
I've got a good one. Before we wait for your tax questions. So my 11-year-old son comes and is like, oh, Dad, look, I found the joke. It's really funny. So the girl comes up to her mother, says, Mom, I see like a gray hair. Like I see like 3 or 4 pieces of gray hair on your hair. She's like, why is that? It's like, every time kids don't listen to their parents, they give them a hard time, or whatever, just don't listen and they're not behaving, we parents get a gray hair. So little by little, this is how we get gray hair. And this daughter was like shocked. She's like, what? Are you serious right now, Mom? She says, yes. She's like, now I see why grandma's hair is all gray. Ha ha ha. That was pretty funny. All right, cool. All right, so it looks like we had a mix up with our link, but that's okay. I'm here to, hey, we can sit all day and entertain. But anyways, what other tax questions? Or should we just talk about some tax strategies? All right, while we're getting people coming in here. By the way, Chandler, was that helpful? Please let me know, Chandler, if that was helpful in the chat. Okay, I really want to know. Now, if you have any follow-up questions, let me know. For those of you that are just joining in, we're live on YouTube. If you ask questions, you get to win one of these things, okay? And AirPods. All right. Cool. Oh, Mariana's already putting names in the thing.
And I have another question coming in
from
Deborah. So
we're going to hold off on that question. I want to talk about importance of Roth IRA. Okay, a lot of business owners that are probably on this call right now, and I'm going to be releasing a YouTube video that's going to go into a lot of detail. By the way, if you guys are tuning in, please ask tax questions. I'm going to be answering them in a second. But about Roth IRA, it's very, very important for everyone to understand that Roth IRA is something that you contribute to your retirement account after tax, right? Meaning to say after you pay taxes on that income that you receive, okay? The limit is $7,000 annually, and it's $8,000 if you're over the age of 50, okay? So I'm going to write 50 and up, all right? So let's focus just on this number right here, $7,000. Now, if you're a business owner, you don't need to set up Roth IRA through the business, okay? It's an individual retirement account. Now, why is this really important for you? Is because any money earned in your Roth IRA account can grow tax-free. Like if you pull up your calculator right now, I don't have that calculator with me, you can really pull up your calculator and multiply. If you were to contribute $7,000 times 30 years at, let's say, average returns in the market at 8%, all of the earnings in there will be tax-free. A lot of business owners, what they do is that they maximize their 401k. They maximize their traditional IRA. They even maximize their cash balance plan, which is totally okay. What I like to tell my tax advisory clients is like, why don't we have different different buckets of retirement, right? You can have a taxable retirement. So 401k is something that will be taxed to you in the future when you retire, but you can also have a tax-free income. You can set this up for yourself. You can set this up for your spouse. You can set this up for your children as long as they have an earned income. We're actually releasing a video about it tomorrow, full explanation how you can set this up for your children as long as they have an earned income. Absolutely incredible strategy. A lot of business owners are not using it. They just hear about it. They see a social media post, a social media link, but they don't really understand the power of this. Please definitely speak to your tax advisor. Now we've got a tax question. Let's go to that tax question.
I have a question from Deborah. Hi, Deborah.
Deborah, hello.
If I have several companies, one an LLC and one a sole proprietor, and I use a vehicle for both companies, can I split it between the two, or better to do mileage?
So Deborah says, Boris, I've got a sole proprietorship business. Now, sole proprietorship is when you do business under your personal name with your social security number. Then she says she has an LLC. Deborah, can you specify right now, follow-up chat, is your LLC taxed as an S corporation or not? Okay, so Deborah says, Boris, I have a car. See if I can draw a car here. This is from my childhood memories. How's that
Not
for
bad.
a G-Wagon, huh?
Not bad.
Not bad, right? Okay, let's say, okay, Deborah's got a car, okay? And Deborah's like, Boris, can I write off the car from the sole prop?
I have an answer.
Yes.
It's an LLC, is an S-corp with employees.
Okay, so she has an S-corp with, I'm going to put EE for employees, okay? So she's got a sole proprietorship where she does business under her personal name, could be some kind of a side gig, consulting, whatever that may be. And she's got an LLC that is being taxed as an S corporation. Now, I have a very extensive video on this on my YouTube channel. If you're using a personal car, okay, personal car for the business, your S corporation can reimburse you for that use, okay? So let's say that's you a happy person right here, okay? And then your S corporation can reimburse you for that. Now, Deborah, you asked me, should I use standard mileage method or not? I would leave that question for your tax advisor. First of all, do you have a tax advisor? Please let me know in the chat. I would leave that question for your tax advisor, because I don't know how much do you use the car for the business. It could be beneficial to just use the standard mileage rate or actual expenses of the car, including depreciation. And your S corporation can reimburse you using an accountable plan. So to answer your question, can you use the car for both businesses and get a write-off? Yes, absolutely. You get a write-off based on the usage. As a matter of fact, you will probably get a better deduction on the sole proprietorship level, because it will also be deducted from your self-employment income, which will reduce your self-employment taxes. Huge strategy play right here for you. So definitely speak to your tax advisor. Now, we've got a lot of new people that joined in. I just want to zoom out for a second, guys. Just want to show everybody what we have on the table right here. We've got Thinking Outside the Tax Box. We got the S Corporation book. We've got the mug. We've got some the mouse pads. We're going to be giving those away. 3 of each we're going to be giving away, and we're going to be giving away AirPods. All you have to do is answer some questions, all right? We got an AirPods given out to 1 winner, okay? Answer question. Mariana's going to take your name, drop it in one of those mugs, and then we're going to get a winner. All right, let's go with questions.
So I'm putting in
By the way,
Deborah's
Deborah,
name in the
please
mug.
let me know if this question was helpful. And I want to ask everybody, if you are asking questions and I'm answering it and you like it, please let us know in the chat. It really helps the YouTube algorithm push the content even more, get more business owners so they can save more money on taxes by watching this channel, watching live. So please definitely engage as much as you can in the chat. I beg you, please. All right, next question.
Next question is from Ken Lombardo. Hi, Ken. So Ken says, I have an S-corp and W-2 income as well. I've been investing much passive income in velocity banking with significant interest returns. How can I protect myself against these tax gains?
All right, so Ken, so you've got an S corporation and you have a W-2 income. Can you let us know in the chat, is this W-2 income from your S corporation or is this outside income? Mariana, can you read that question again? He's got an S corp and a W-2, and what was the question?
Yes. He says, oh, actually, there's a follow-up to him. I have an S-corp and W-2 income as well. I've been investing much passive income in velocity banking with significant interest returns. How can I protect myself against these tax returns? I also have a solo 401k that I transferred all traditional IRA funds over to, trying to convert as much as I can over to Roth systematically. Is there a formula I should adhere to? I am 64. Let me see if he...
Do we have a follow-up answer?
He said outside interest income is over 100K.
Okay. Oh, it's outside income. So he's got an S corporation and he has an outside income, a W-2 income. So I don't know how much you make outside of a W-2 income, but there's actually a strategy. You've got to speak to your advisor. S corporation, in some cases, all right, guys, don't take this out of context. S corporation, in some cases, is actually not a good idea if you've got a W-2 income from outside sources, depending how much you make on that W-2 income. Ken, I would like you to speak to your tax advisor about this situation and how you can save more self-employment taxes, but actually not being an S corporation, because you've got this W-2 income right there. Now, you also said you have a solo 401k and you want to convert as much as you can into a Roth IRA. You also said that you're 64 years old. I would definitely recommend you also speak to your financial advisor and your tax advisor. The reason is, if you're going to convert solo 401k to a Roth IRA, you can do that conversion. You're going to pick up tax on it, but you've got to make a calculation. How long is the money going to stay there? And how long is the money going to earn interest on it, right? Earnings that will be tax-free. Is it worth making that conversion or not? I would definitely, because again, based on this live, I don't know much of your situation. That's what I would do. As far as your interest income, now congratulations making $100,000 on your interest income. I would say if you focus on these strategies that we spoke about right now, that should help you with your tax liability that you're getting at the end of the year, which is also including calculating on the interest income. I hope that was helpful. Let me know if you have follow-up questions. Mariana, let's take a next question.
I have a question from Gary Rappaport. Hello,
Gary.
Boris. I'm Gary Rappaport, a real estate agent in LA operating as a single member S-corp. Can I deduct 100% of my and my family's medical expense?
Okay, so Gary, welcome. So you said you have a single member S corporation. I'm guessing you're a single member LLC, but you picked an S corporation status, which is amazing. Okay. Now you're like, Boris, I have medical expenses. I've got myself, probably, right? I'm guessing you got a wife. Okay. I'm guessing you got children. And you're like, hey, can I deduct my medical expenses? The answer is yes, and a double yes. Because when you are an owner of your S corporation, IRS allows you not only to deduct your medical expenses, but also reduce your wages that you get from a W-2, which also helps you reduce your self-employment taxes. All right. This is, I like to call it 2% health insurance strategy. I have a video on it on YouTube, exactly the name like this. Once you watch that video, you'll know exactly how to implement this strategy. But I want to explain to you
Can you just
how
say
this
the name
works.
of the 2%?
It's 2% health insurance strategy. That's the video that we have. But Gary, I don't know how much you pay yourself from an S corporation. I'm just going to use an example here. Let's say you're paying yourself $100,000. On the $100,000, you're paying federal taxes, you're paying state taxes, and you're paying self-employment taxes, which is the Social Security and Medicare taxes, both by your business and yourself. Okay. Now, if your health insurance premiums are $20,000, you get a deduction from your income of $20,000, okay? Deduction, $20,000. Additionally, you don't pay Social Security and Medicare taxes on this, so it's also going to be deducted from your W-2. So now you have $80,000 that is subject to federal and state, and not subject to self-employment tax. So not only are you getting a deduction, you're also saving on Social Security and Medicare taxes. This is one of the biggest strategies for S corporation owners. You don't really have to pay to get this strategy, meaning say you don't even have to invest money anywhere. All you have to do is just change how this is reported. And the way to do that, you have to change it on your W-2. So all payroll platforms have this, okay? They all have an option called 2% health insurance for S corporation owner. Like you look into your payroll platform, it's there, okay? So could be huge savings for you, Gary. Thank you for that question. Please let me know, guys, in the chat whether you're asking a question or not. Whatever I'm answering, if it's helpful, it's going to help us with YouTube algorithm. For those of you that are new, we're giving out 3 Thinking Outside the Tax Box books. We're going to mail that to you. 3 S corporation books. We've got the mugs, and we've got some, what do we got there?
We have
mouth pads. And most importantly, one winner is going to walk away with Apple AirPods. Yes. All right, questions. Let's go.
Okay, so Caleb Acuna says, does the qualification to both types of IRA depend on W-2 income or all income? Because there is a limitation, right?
Sorry, I'm writing W2 here. Okay, so we've got Caleb.
Yes.
Caleb, aren't you a client of Boris M Tax?
I think so.
Caleb, say yes or no in the chat. I would appreciate it. So Caleb is asking, let's ask his question again.
Yes. Does the qualification to both types of IRA depend on W-2 income or all income? Because there is a limitation, right?
Yes. So Caleb is actually asking an excellent question.
He is a client.
He is a client. All right. Caleb, so the question is really for your tax advisor in our firm, but I'd love to answer it here. Okay. Roth IRA, the income limit, if I'm not mistaken, it was updated for 2025, is $243,000 if you're married filing joint. Okay. Married filing joint. That means if you make more than $243,000, you cannot directly put money into Roth IRA, but you can put money into the traditional IRA. You're allowed. There is no income limit per se, okay? And then within that same year that you're doing it for, let's say for 2024, you convert it to Roth IRA, okay? Now, a lot of people say, oh, Boris, aren't I going to pay tax on the conversion? No, because you're doing it for the same tax year. You never even got a chance to take a deduction. So there are income limits for Roth IRA. If you're married filing jointly and your income is less than 243, I think it's between 220 to 243. There's phase out limits, but definitely see if you're under this income, you can directly put it into Roth IRA, or you can do traditional. Okay, a lot of platforms, guys, like a lot of financial institutions, I'm sorry, they let you do it easily on your app. Like I personally did it for 2024. It literally took me 2 minutes, right? I did it for Mariana as well. I was just like, Mariana, let's open up your Roth account. I'm laying down in bed. We opened it up, funded, and then transferred. Like it's so easy these days, okay? So put it in traditional and do what's called Roth conversion, okay? Another name for it is backdoor Roth IRA. All right, I know we've got like 35 minutes left, so let's go through the questions. By the way, are we getting feedback if people are enjoying this, or are we like shutting down and going home? All right, guys, participate. Participate. Mariana, I don't see you putting names into the mugs.
I have names. I actually need a new pen. Can I get a new pen?
She's so bossy. Okay, let's go. You made the poor guy walk out of the room.
I could use a whiteboard marker. Okay, question. Taxpayer resides in Arizona, has an S-corp created in Arizona, but he is working his S-corp in Texas. Taxpayer is in payroll. How does he have to file his tax return? Why are we asking this question in third person? Are you?
What's the name?
Jesus Leono.
Hello, Jesus Leono. Am I writing it right? I hope I'm spelling it right. All right. So the S corporation is located where? In Arizona.
It's created in Arizona.
Created in Arizona.
But he is working his S-corp in Texas.
Okay.
Taxpayer is on payroll. How does he have to file his tax return?
Okay, if your S corporation is just formed in Arizona, but you are located, in Arizona, but you're located in Texas, and you're working in Texas, and your S corp is in Texas, you do not file. What do you say? How do I pay my taxes?
How does he file his tax return?
Which one? I'm guessing the business. I'm like confused here.
I'm assuming it's the business.
All right, let's read the question again. S corporation is created in Arizona.
Yeah, but
okay, it doesn't do any business in Arizona. So that's
no.
it. You file in Texas, right? That clarifies it. Thank you. All right, next question. I hope that answers. By the way,
I can't say it. It's a FBO Gilev. If you please share your name. The question is: would like to construct a separate parking lot and garage/lot combo for 100% business use on my residential property, funded from a solo prop or C corp. Does it matter? Bonus depreciation eligible.
Ooh. Let's read it again.
I would like to construct a separate parking lot and garage combination for 100% business use on my residential property, funded from a solo prop or C corp. I guess he's asking where could it be funded from? Does it matter? Bonus depreciation eligible.
Well, okay, I want to understand your question. You want to build a garage, but also a parking lot for 100% business use. And the question really for you is, what industry are you in? So I can kind of get a better idea. But if you can build it out of the entity for which you're building it for. And can you take bonus depreciation on the land, on the parking lot, so to speak, the lot itself, right? On the lot when you purchase it? No, but can you take depreciation, bonus depreciation, for example, on building a garage and this material and the building, and even do cost segregation study? Yes, you can. Okay, you don't need to buy it separately with a C corp. But again, I'm not sure, or sole prop, I'm not sure what your business structure is or what is exactly that situation. But if it's 100% business use, just know that all the expenses for this will be deductible. You want to speak to your tax advisor about this. Super, super important. All right, next question.
Profit with Law, Moshe Amzel says, Boris, great stuff. I love the stage setup and seeing your growth. Thank you, Moshe.
Thanks, Moshe.
Fully Faltu says, how to think about returns from saving on taxes now, but will lesser amounts saved versus investing it with much bigger returns in 4 to 5 years.
Guys, your questions make my head spin. And you can't even read. I'm kidding. All right, let's do it again.
I guess he's asking, how do I think about returns from saving on taxes
Yes.
now, but will a lesser amount saved now versus investing it with a much bigger return in 4 to 5 years than saving now with a lower return?
I think I see your question. What's the name?
Fully?
Fully? Like I'm fully full?
Fully full?
Okay.
It's-
I'm kidding. I'm kidding. We're not making fun here. I promise. Okay. Mr. Fully. All right. So you're saying, Boris, I think I understand your question. I'm saving money right now on taxes, but the money that I used to save on taxes, I could invest it somewhere else. So you're saying, is it really beneficial? I'm guessing you were presented the strategy by whoever that may be, that you have to take your money and invest it somewhere. That means you have to say goodbye to your money. So let's say you invested into something, let's say a retirement account, $30,000, you saved $10,000. But you're saying, but if I'll use this $30,000 to invest into something else with bigger returns, how is that beneficial? It probably is not beneficial, right? You've got to speak to your tax advisor, because if you can use your money, because there's a lot of people there out there, a lot of business owners, right? They always fall into two categories when it comes to think about investment and tax savings. And before I get to that, actually, I want to point out there is tax savings, and Fully, this is a great question, by the way. There is tax savings, two types of savings, okay? I'm going to write this, call this money bye-bye, okay? And I'm going to write this restructuring. Now, what do I mean by restructuring? And excuse my terrible handwriting. Can you even read anything I write?
I want to know.
All right, restructuring. Every business owner should know that by just restructuring few things in your business on your P&L or how you take deductions, you can save money on taxes. Our clients save on average an estimated $40,000 to $50,000 without putting money into anything else. Just restructuring how things are done on their taxes. For example, reimbursing yourself through an accountable plan for your home office, for accountable, using PTET strategy. That the 2% health insurance that I answered someone's question earlier, I think it was Greg or Gary, right? That 2% health insurance question, just changing that little thing on your W-2 will save you $3,000, $4,000, $5,000, $6,000. So that's restructuring, okay? That's one type of a tax strategy. There is another type of a tax strategy that you will put money in, you will say bye-bye to your money, but you're going to get savings back. And that's what Fully is asking. Boris, if I'll invest, and I'm going to use an example here, $30,000 to put into my solo 401k or SEP IRA, whatever that means, whatever that may be, sorry. And he's in a 30% bracket, he's going to save $9,000. So really, he said bye-bye to his money from out of pocket, right? $21,000. He's like, yes, but I put it into my own SEP IRA, retirement. It's going to have earnings there. And it saved me $9,000. I was out of pocket $21,000. He's saying, Boris, is this actually beneficial if I can take $30,000 and Fully, I hope I'm getting your question right, and I invest it into something that's going to yield more returns for me in the next 4 to 5 years? Yeah, absolutely. Right? Absolutely. Now, I was going to say before this that there's two types of taxpayers when it comes to this particular strategy. There's somebody that's like, some taxpayers say, I don't want to invest. I don't want to say bye-bye to my money, okay? I don't want a retirement strategy, or if I put it into some financial vehicle, I'll get a deduction. I can do a lot more with my money. Then great, you are the second category, right? The first category, people want to save for retirement. It's always 50-50 with people. I would say, actually, I shouldn't say that. It's really more like 70-30. Based on my experience, most people want to put money into the retirement because they want to have a financial stability when they retire. Whatever their philosophy on this, depends who they follow. They follow Robert Kiyosaki or they follow Dave Ramsey. Like, I don't know, right? But everybody wants to have a financial stable retirement when they retire. So they prefer a retirement account and they prefer put money into the retirement. Okay, based on my experience, that's about 70% of business owners. The other 30% of business owners like, nah, I ain't putting money into the retirement. If I know I'm going to save money on taxes or it's going to build my retirement portfolio, but I can use my money to invest into something else that's going to make me more money. But if it's going to make you more money, great, then you'll probably be set for the retirement, right? Everybody's risk appetite is different. Everybody's investment strategy, retirement strategy is different. All right, let's do it. Next question.
Okay, it's not a question, but Carl Hens Amy says, I'd love to get a book. Hey, why not? I'll put your name in. But ask a question, please. Then I have
TJ, can we switch to this camera?
Then I have a question from MSD. Can my S-corp pay my 12-year-old child?
Can the S corporation
And
pay the 12-year-old child?
I have
I'm
two
releasing a video on this tomorrow on a
Yes,
Friday.
stay tuned.
Should we do the Donald Trump dance?
Go, you go.
The Donald Trump dance. It's appropriate since it's a tax strategy, huh? Oh, we're live on Facebook
we
too?
are live on Facebook.
When did we go live on Facebook?
About a minute ago.
Whoa, welcome,
So-
guys. This, by the way, for those of you that don't know, we have a private Facebook group. So welcome, amazing. So people from Facebook, please ask questions. Now, it only took you 40 minutes to go live on Facebook, but thank you for doing that. I appreciate it.
Yes, thank you.
Ha ha ha! It was a joke, TJ. Ha ha ha. Okay, cool. Great, guys. So for those of you that are just joining live, either on Facebook or on YouTube, we're giving away Thinking Outside Tax Box. You got to ask questions. We put your name in the mug. We're giving away AirPods. We're giving away S Corporation book, the mug, whatever. Just ask questions. We're going to be raffling it off. All right, let's go. Do we have more questions?
So MSD has two questions.
MSD.
Can I deduct solar system expenses as a percentage of office deduction?
I'm guessing she's putting, who's MSD? MSD, so I'm guessing you installed solar on your personal house, which you have a home office. By the way, for those of you that are asking questions, or you're not asking questions and you enjoy this content, please help us push this algorithm on YouTube so more business owners catch this channel. Now, the question is, do I get a deduction for the solar? So you get a deduction for the solar for the portion of your house. Not only do you get a tax credit, but whatever you use for the business purpose, which is for the house, you may get a deduction. You would have to speak to your tax advisor how this works. There's technicality involved. He has to back out some of the tax credits from the actual purchase. So can it be done? Absolutely. Please speak to your tax advisor. You may even actually reimburse yourself through an accountable plan. Not really sure how your business is set up, but yeah, absolutely. Take every deduction possible, okay? All right, let's go.
Question from Z Anderson. My husband has an S-corp. He took $80,000 in wages for 2024. I have a sole prop that made about $30,000. His S-corp made about $100,000. How can we still save on our 2024 taxes through retirement contributions for 2024?
I got you, Z Anderson. So Z took
I got you too.
$80,000, right? Then he said his spouse, did I hear that right?
Yes.
Spouse took how much in a W-2 from outside sources?
Her spouse took $100,000.
$100,000. How much was the business income from K1? Oh, you got to be on top of your game over here.
I'm just putting that in.
What's going on?
Husband has an S-corp. He took $80,000 in wages for 2024. She has a sole prop that made $30,000.
Oh, sole prop.
Yeah.
Okay. Okay.
His S-corp made $100,000. How can
got it. Okay. So, all right, cool. So I'm gonna sole prop spouse, and then I'm gonna say S-corp. Okay, got it. So, no, this is your spouse, right? Because okay.
That's
Spouse, and this is I'm gonna write taxpayer. Okay. CPA. Okay. So Z Anderson, you make $30,000 from your sole proprietorship. So for those of you that don't know, sole proprietorship is non-incorporated entity. You operate under your name. You may have an EIN. Okay. I'm going to assume you have no employees because generally speaking, sole proprietors don't have employees. So for the purposes of this video, of this answering your question, I'm going to assume you have no employees. You have two options. You can put away into a SEP IRA. You can put away into SEP IRA. It will be 20% of your net profits. So 20% of 30,000, that'll be $6,000. Okay. You can put into SEP IRA. You can also open up what's called a solo 401k. I'm not sure if you would want to do it. It would require a lot more cash flow to put in. You can do a deferral of like 23,000, and then do 20% of that of the net profit. So probably this would be a better option. Again, you may have a cash flow for this. For your husband, the same scenario over here. So if he's the only employee, and I'm going to assume that he's the only employee, if he's not the only employee of his S corporation and he's got other full-time employees, SEP IRA would not be the best option, because then he has to contribute 25% of their salary to them as well. But if he does not have it, probably the easiest and the quickest thing for you to do, depending on your cash flow, again, you can put away up to 25% into SEP IRA, even if he has a and that would be two separate SEP IRAs for you. I hope that answers the question, Miss Z Anderson, and say yes in the chat. All right, next question. Do we have a lot of questions, Mariana?
We have a lot.
You got to get a good job answering them.
Me answering them?
Really, what about on Facebook?
No, we just started getting people joining in on Facebook. No questions yet.
So ask OD to Slack if there are any questions. You can't usually see questions on the screen.
Okay.
Yeah, so OD, if you're watching, by the way. All right. Who else we got watching from our team? Let's say hello.
Yeah, guys, if you're watching from our team, please say
Mariana,
hello.
questions. Come on.
Okay, would 60% bonus depreciation be applicable to the garage cost? Oh, no, I think we already answered this.
Yes, let's continue.
Okay. Opening a food...
To answer your question, yes, if it's for the garage cost for 2024. If it's for the building, yes, it would be applicable. You would probably have to do cost segregation on it to see which part would qualify for a bonus depreciation. Again, I don't know the full scope of this scenario, but yes. All right, let's go. But guys, please, any information that I give over here, it's for you to know, wow, I can do this and I can do this, but don't run and do it on your own. You've got to get a tax advisor. If you have a business, you make profits in your business, you make money in your business, remember, you're giving it to the IRS, which may be okay, but only after you use all the tax strategies that are legally available to you, okay? So please make sure after I give you these answers over here, like, wow, I learned something new. Let me go to my tax advisor and ask him. Now, if you don't have a tax advisor, get yourself a tax advisor. All right. I don't know why you're waiting on questions.
As a business owner, can I contribute to an HSA for a future medical bill? The question from Carl Hens.
Okay, amazing questions, guys. HSA question, okay? HSA question. What is an HSA? HSA is health savings account.
I wanted to say that.
What?
I could say that.
Wow, you know something. I'm kidding. Oh, I'm going to get it after this one.
I don't do taxes.
By the way, for anybody that doesn't know, this is my wife, Mariana. All right. And I'm just going to give a message to our video guys. Thank you guys so much. This is amazing. I want more of this camera so we can make more shorts out of this, okay, if possible. Yes. All right. Great. Now, HSA, okay, health savings account. So he asked, can I contribute to it for the future medical bills? Yes. If your health insurance allows it, right, it may be still a high deductible health insurance, right? In order for you to get HSA, it has to be high deductible. And you're like, wow, my health insurance is high deductible. Yes, there's another limit that says, maximum out-of-pocket expenses. Sometimes health insurance companies play with that, and you don't qualify for HSA because you get a better health insurance, maybe a little cheaper, whatever that may be. I personally never liked this idea, but see if your health insurance qualifies. If you do qualify for it, yes, you can absolutely put away money into the HSA. I think the limit is $8,300 for last year or for this year. Don't quote me on what the limit is, but for a family plan, I think it's $8,300. And the best thing is that any money that goes in there is tax deductible. You don't have to take the money out for your medical expenses this year. It's to accumulate money for medical expenses in the future. I mean, people, as they tend to get older, they tend to have a little bit more of medical bills, okay? The $8,300 goes into HSA just like it goes into your Roth IRA, okay? But the difference over here, it's before taxes. You get to deduct it. Once you deduct it, okay, you get a tax savings. But the money in here, whatever it earns, is also tax-free. So if you turned your $8,300, let's say one-time contribution, and it turned into $20,000 20 years later, the entire $20,000, okay, including the contribution and what it's earned, is tax-free to you. All right, let's do the next question.
Question from
Are we
Alan.
getting names in the people? because I want to know who's going to win the AirPods.
I'm putting, look. See?
Nice. Wow. It's like you're putting everybody. It's for people who ask the most questions, Mariana. I'm kidding. All right, let's go.
Question from Alan. We have a trust.
Hi, Alan.
Which we have transferred our home into. We have a vacant piece of land worth approximately $2 million with no significant basis, 40K. Should I move the land into the trust before I sell it?
Okay, I don't do trust questions on live. The reason I wanted to listen to it is see if it's something that I can answer, but it could be taken so much out of context, so we don't do questions on trust live. Sorry. Next question.
Okay, I'm still putting your name in.
That's like cheating. All right. I'm kidding.
Gary says, thank you for answering my question.
Gary, you're going to
Nancy
get those
says, all
savings on the health
good.
insurance now. Let's go.
How do you determine the amount you are taxed when doing a conversion?
I'm guessing you're referring to a conversion from traditional IRA to Roth IRA.
I guess.
Yeah. So whatever the amount you're converting would be taxable. Hopefully that answers the question.
Can my medical expense be deducted through my S-corp if our insurance is through my husband's employer, not my S-corp?
Great question. So if you have, let's just kind of understand this right now a little bit more about the health insurance, okay? So
it's a question from Amy.
Hi, Amy. Thank you for asking a question. And go ahead, put her name there.
That was a great question.
She only asked the question once, and yet you put her name in the...
She needs that book.
Okay, great. Oh, she needs it. We'll just send it to her. She doesn't need to hustle for it. You got it. Amy, we'll send you the book. Don't worry. All right. Just send us $20 for it. I'm kidding. It's free. Okay. Amy says, if I have an S corporation, okay, and I have medical... When you say medical bills, I want to be very careful, okay? So... medical bills are not deductible from the S corporation because you said your spouse has a job, which I'm guessing you have medical insurance through the spouse.
That's what it sounds like.
Yeah. So if you have insurance through the spouse, unfortunately, the medical bills are not a deduction for your S corporation. But you need to find out if your husband's insurance allows for you to have an HSA. If it allows for you to have an HSA, you can then contribute money into the HSA and use from HSA for medical bills. Another important note I want to make, let's say you've got an S corporation and you have a spouse that has a W-2 job, and the spouse's job offers medical insurance, but you decide not to take that medical insurance for whatever reason. IRS says, listen, you've got a spouse's job that offers you a medical insurance. You're not taking it. You can take a deduction in the S corporation. It's a little tricky. I know, not fair. So keep that in mind as well. All right, thanks.
Okay, Carlhin says we need more Donald Trump dance after each strategy.
Well, it was like this? No, wait. I forgot.
there's a method to the madness.
Oh, there you go. I got it. It's like this. And
Don't forget to point.
No, and then yeah. No, wait. And then imagine if Donald Trump sees this video. It'll be cool. He likes it. Maybe he can ask me a tax question.
Let's go.
Boris, let's talk about depreciation.
We have a hello from Wela and a hello from Nick from our team. Hi, guys.
Woohoo, hello. Oh, you guys not working and decided to watch YouTube? That's good to know. I'm kidding. All right.
We want you here. Question from Joseph. Question. I had heard some time ago that the U.S. is the best place in the world for tax shelters. Would you still say that's
Doing
true?
the Donald Trump dance. U.S. is the best place in the world. Agreed. About the tax shelter, think twice. Let's go next.
Yin Yang says, if I'm making a large income as a single business owner, let's say over 500,000, why would an S-corp be more beneficial for tax purposes rather than taxing at an LLC level?
Oh, Ying, I just sat down. I have to get up and explain that on the board.
Is really that beneficial?
Don't judge a man by the color of his bottle.
Takes a real man to drink something from a pink.
All right, guys, everybody.
Hide it.
I'm not hiding it. It's just gonna bother. It was all the way on the bottom, by the way. I hid it over there. Okay, I want Ying to. Mariana's going to read her question again. For all the single-member LLCs and for those who are already an S corporation, I want to bring to your attention the real tax savings of having an S corporation. So, Miss is Ying, right? Ying, did I get that right?
Yin Yang.
Yin Yang. Okay, Miss Yin Yang. She's got what? Let's go.
If I'm making a large
Can I
income,
have my phone? I'm so sorry. I'm going to need the calculator for this. Thank you so much. See, this is how you ask people, please and thank you.
oh,
And you're like, I don't
did
have a pen
really-
over here. The pen doesn't work. Somebody get me a pen. Please and thank you. All right. All right, we're going to need a calculator over here. All right, so let's go. Miss Yin Yang said,
if I'm making a large income as a single business owner, let's say over 500,000, why would an S-corp be more beneficial for tax purposes rather than taxing at an LLC level? Is no FICA really that beneficial?
is no FICA?
That's what it says. I'm just reading.
No FICA?
Yeah.
Okay, single member LLC making $500,000. Okay, and S corporation. All right, so she says, listen, Boris, what's up with this talk? Miss Yin Yang is saying, right? What's up with this talk with an S corporation? Am I really going to save a lot of money on taxes being an S corporation? This answer is for everyone who's already an S corporation, so you can see how much money you're saving. Okay, now. What's the limit for 2024 to 2025? Oh my God, I think it's $170,000. I'm not sure. I don't remember exactly, but I'm just going to use 170,000. I think it went up with inflation, whatever that may be for 2025. Let's just say 170,000. Okay, it's around this number. Okay, all the accountants out there that are watching and saying, Boris, you're wrong. I know. Okay, $170,000. The first $170,000. Okay, and again, I'm estimating this number. I don't know the exact. Is subject to what's called a social security tax. Okay, when you are self-employed individual, IRS says you have to pay social security tax as an employer and as an employee of yourself. So 170,000, we're going to multiply that by 12.4%. Okay, so sorry. Okay, that's going to be $21,000. $21,000. Listen to this, Miss Yin Yang. Okay, Yin Yang. Okay, the first 170,000 is subject to 12.4%. The other 500,000 is subject to 2.9%, which is 14,500. So I'm going to round up to 15,000. We got $36,000 in self-employment taxes. This is what you pay on top of your federal income taxes and your state income taxes. Okay. Now let's go back for a second and let's say you're an S corporation, okay? You've got an S corporation, and I don't know what you do in your business, but I'm going to assume the worst case scenario and give you $150,000 reasonable compensation, okay? So on $150,000, because you are an S corporation, you're supposed to take a salary. So I'm not even going to play the game, oh, you take 60,000 salary, 70,000. No, let's use realistic numbers, right? $500,000 net profit business. Whatever you do in your business, we're going to assume you're making $150,000 in W-2. Now, the $150,000 as a salary is subject to Social Security and Medicare tax. So again, we said that combined rate is 15.3%, okay? 12.4 plus 2.9. So what is that? Let's calculate that. 150,000 times 15.3. I wish you could do math. But...
I'm not.
Okay, we got $23,000. Okay, so 36,000 minus $23,000. That is $13,000 in tax savings. Okay, that is how much you save by, again, remember the tax strategy restructuring we talked about? You just changed one thing in your business. Now you might say, well, Boris, $13,000 is not a big deal for me. I don't want a complexity of an S corporation. There's a lot more savings to an S corporation than you think. Okay, if you said single, so I'm assuming you're single, and if you're making over $500,000 and you have W-2 or you don't have employees, guess what? You get phased out of a QBI 20% deduction, which is 20% of your net profit. If you have $350,000 net profit now, wait, did I do that correctly before? Sorry. Yes, I did. Sorry. Now, if you got $350,000 net profit, 500 minus your salary, now you get 20% QBI deduction, which is what's that? I don't want to do math in my head. I know I'm an accountant, guys. That maybe I'm not an accountant. Okay, did I do that right? I did that wrong. Yeah, it's $70,000. Okay, $70,000 in additional deductions. If you're in a 30% bracket, that's another $21,000. Some states don't allow you to take PTET, pass-through entity taxation, if you're a single owner. If you convert to an S corporation, you can pay PTET tax on this. I'm going to use the lowest rate, which is I think is 4% out there. 350,000 times 0.04. That's 14,000 in deduction. And I use the lowest rate, honestly, times 30% tax bracket, that's another $4,000 in tax savings. Now, you tell me, if 25 plus 13, $38,000 is chop change for you, I'll take it any day. I'll take it any day. Super, super important. For those of you that are still single member LLCs or sole proprietors, don't have an S corporation, like Miss Yin Yang, making $500,000, don't sleep no more. Can we put Miss Yin Yang's question? That was an excellent question. Can we put her name?
I put her in.
You know what? Put her name one more time so she gets more chance of winning. We're going to send her the S Corporation book. All right, cool. I hope this is clear. Let me know in the chat if this was helpful, guys. Do we get anything? Do we get any love in the chat, or are you just hiding that from me?
No, we're getting love. I also have a hello from Adriana, and she put that that
Guys, if you've never
side.
met the best bookkeeper, Adriana on our team is one of the best of the best of the. Don't nod your head. It's my moment to talk about her right now. One of the best. All right. So if you guys don't have a tax advisor that also has a bookkeeping team, you're missing out. All right.
How can they get a tax advisor?
Who?
Anybody watching?
Anybody watching? I wasn't going to promote myself, but okay. Taxplanningcall.com. Mariana can put it in there. www.taxplanningcall.com. Just with a raised of hand, please, guys, let us know. First of all, are you currently subscribed to our channel? Say yes or no. I want to see that in the chat. Please let me know. Are you currently subscribed to our channel? Yes or no? We're going to be doing the prizes right now. Okay. By the way, for next time we're going live in a couple of weeks, I'm working on something very special. I didn't tell you yet. But we're going to try to set up a system where you can call into the studio and ask live question. Yes, TJ, we're going to make it happen, right? Yeah. All right.
I put the link in from TJ's account. So.
Oh, okay. So it's coming from a TJ. Yes. All right. TJ, you're becoming famous in our chat. All right. Cool. Let's go.
Okay.
Guys, by the way, let us know if you subscribe to our channel. Mariana, can we see who subscribed, who's not? I think we're done with questions. We got to wrap this up.
We actually have a few questions more to go, and then we can wrap up if you don't mind.
Okay, fine. If she says so. All right, let's go.
Okay.
Yeah, work me to the bone, Mariana. Work me to the bone. All right, let's go.
Amy gave me a shout out. She said, Mariana, you're the best. So, your name goes in again.
What? Amy, if you say that I'm the best, your name will go in again.
Question from Moshe.
Is this Moshe Amzel?
Yes, it is.
Mr. Amzel! All right, let's go.
Do you have any out-of-the-box strategies to lower income for SSTB owners that are over the QBI threshold?
Yes, please take this book. No, I'm kidding. Do I have a strategy to lower to what?
Out-of-the-box strategy to lower income for SSTB owners.
I'm guessing if he's asking, we have strategies in that book, but I'm just going to answer that question. So the QBI, SSTB, I got it. Can you read that question again? I don't know why I'm getting lost over here.
Any out-of-the-box strategies to lower income for SSTB owners?
Okay, guys, I know why Mr. Moshe Amzel is asking this question. For those of you that are attorneys on this call, while you see his question, check out his profile, join his amazing group that he's got going on for attorneys, okay? I think they help with, I'm not sure, I don't want to misspeak, but I know he works with a lot of attorneys. I think it's in a marketing or a strategy of a law firm building. So I know you didn't ask me to promote you. I'm just doing it. I don't know why I'm doing it. But anyways, he's asking, I know what I'm doing this because we need to explain to people what is an SSTB, okay? SSTB is Specified Service Trader Business. So remember that QBI, 20% QBI that we spoke about, okay? This was a free gift from the IRS in 2017 when they passed TICJA. Tax Cuts and Jobs Act. Just to keep things simple, you take 20% lower of your taxable income or your business income, and you get a deduction, okay? So let's say your business income is the lowest end, and your business income is $200,000. Oh, like we had a case with a Miss Yin Yang, right? 350,000, but we're going to use 200 times 20%. You get $40,000 deduction. That's a gift from the IRS. Now, if you're an SSTB, specified service trade or business, basically it's in another language where IRS says, I don't like you. Okay, and who are those people? Accountants, attorneys, medical practices, medical professionals, doctors, certain types of consultants, and a couple of more other not such a common industries there. Okay, so if your income is over, I don't remember what the threshold is, like 480,000 or something, then hey, we don't care. You don't get the 20% tax deduction. So Moshe is asking basically for his base, right? For the attorneys, because attorneys get 20%. And says, are there any tax strategies to do this? There are, Moshe. The strategies are maximizing deductions, but it also goes up to a certain limit, right? So let's say, for example, an attorney made $600,000, okay? And the threshold to get the SSTB, let's assume it's 480. I think it was around 480 for married filing joint individuals. So you need to come up with a strategy to reduce the income below, right? Oh, sorry. Below 480. Is it possible? Yes, in some cases it is, depending what type of strategy and what type of deductions are still available to them before year end. But if an attorney is already making, let's say, $1.5 million, right? I mean, can you come up with strategies to reduce the 1.5 million to below 480? Yes. Is it likelihood generally that could apply to most attorneys? No, right? Generally speaking. So other strategies, yes. You need a tax advisor to work on this in advance. We do most of our projections calls with our clients, tax advisory clients, in November, in October. Like, oh, we got this profit. Oh, let's reduce it. Whether you're an SSTB or not. Really, really important for you to work with your tax advisor, especially do November, October projections. January right now, like we get the most enrollments, I think sometime in March and April, because like people are panicking and signing up. They just spoke to their accountant, and the accountant said, you owe this much. Like, they're like, you know, right? So like, guys, do projections at the end. Meet with your tax advisor. All right, we have more questions?
I have one more question.
That's it. And then I get to go for lunch. Do I get lunch break?
You're asking me?
You obviously you're controlling.
You know what? You're right. I am controlling the lunch. There is no lunch today.
That's not funny.
I'm kidding.
I lost control of the kitchen, guys. Kitchen is not in my control. All right, let's go.
Okay, Alice is saying she had a client meeting. So will there be a replay? So
by the way, I have a can I interrupt you? I didn't hear a single thing you said. I want to interrupt. Guys, how many of you would like to see a Boris and Mariana show? We talked about this, huh? Have a Boris and Mariana show. How many of you guys would like to see a Boris Mariana show? Let me know in the chat. I'm just curious. All right, what's the question?
It was just
read it out loud so I can hear it.
Okay. I had a client meeting, some joining late and missed so much. Will you be able to share a link to watch the video of today's session? Yes, we're going to share the link. I'm going to tag you in the link. And I'll put your name in too.
Yes, we're going to have it. It's going to be on YouTube. Did we get any questions from Facebook, by the way?
No.
We didn't answer people on Facebook.
No, I've been monitoring, and I've also I'm on the lookout with Odie.
Okay, cool. All right. Yeah, because we didn't really promote it there, but that's okay. All right. I'm happy this is working out. Now, can we do the prizes?
Yeah, this is just the last question. So, question from Rex.
Hello, Mr. Rex.
Medical.
Nothing personal. It's just that she keeps me working. Okay.
For medical, going the S-corp route seems complex.
No, it's not.
Where a C-corp can do it through an accountable plan as well as the HRA.
Yeah, okay.
It's a
this is Mr. Rex. So, Mr. Rex, I see what you're saying. I don't agree with that statement, and we're gonna see this. There's no such thing as a quick question. Like this needs like people. I can't leave people without an explanation. Like this requires a 10-minute explanation. So you can't do that and close the chat for last-minute questions.
Can I just give a Amy? Amy says you are the best. She gets another name in there. She says Boris, you're the best.
All right.
I've been following you way before you were on YouTube. Oh.
Okay. So Rex says as follows. Okay, and Rex, I don't usually use this strategy for my tax advisory clients, but since you brought it up, let's do this. Okay. So we've got an S corporation that you can, he says, setting up S corporation for and taking advantage of the medical insurance premiums is complex. It's not at all. All you have to, it doesn't matter how you pay for your health insurance. Personally, from an S corporation, as long as your spouse doesn't have health insurance from their job, okay, then all you have to do is just log into your payroll software and check off the box that you're a 2% health insurance shareholder owner. Okay, nothing complex about it. But then you're coming back and saying, oh, you know what? I could set up a C corporation and have a 105, which you didn't say the words 105, but I'm assuming that that's what you're referring to, HRA. Now, 105 HRA is basically a plan document that allows you to reimburse your business, to reimburse yourself as an owner of a C Corp and your employees for health insurance, not only premiums, but also medical expenses. Could this work for business owners in general? I don't think so. I'll tell you why. I'm not a fan of the whole thing of creating a management company just for this purpose, okay? So that you can do that. When could this really work is if an individual has really high medical expenses and they have no other employees, because otherwise you're going to be hitting discrimination rules. Some people, I've heard business owners come to me and say, well, I can open up a C Corp with 105 HRA, put myself on payroll there, and leave my S Corp out of it, and I have employees here. No. If you open up HRA here, you've got to open up, everybody has to go on the umbrella. This is actually more complex. And if you want to put your whole business into a C Corp, you're not subject to double taxation, Mr. Rex. I don't know who your tax advisor is. Clearly, you don't seem like you have a tax advisor. Taxplanningcall.com. All right. I would love to speak with you. All right. So what do we got? So we're going to be giving away 3 of these books. These, by the way, are going to come to you in a PDF format because we have an updated version for 2024, right? We have it for 2024 updates. So this is an outdated, like 2021. We got the mugs, and the last person is going to get AirPods. By the way, people say they want Boris and Mariana show?
I don't know.
Oh, nobody said they want Boris and Mariana, so shut it down. Oh, they said yes? Oh, TJ saved you guys. What are we gonna do on Boris Mariana show? You're gonna
I don't know. What do you guys want to talk about?
You gonna boss me around?
I don't boss around. Neither do you.
Except in the kitchen.
In the kitchen, that's that's where I dominate. Yes.
All right. No, Davai, how can you pick? Davai, let me do it. You do it. All right.
I will pick.
All right. First name. Oh, I got 2. I'm gonna drop this one. Okay. You wrote this.
Carl Hens Amy.
Carl Hens Amy. You get the outside the tax box book.
So just
so I need to write her name in here because I'm going to drop this in here. People can win multiple prizes.
Okay.
By the way, if you guys want it, can you put our email address? You guys have to email us, okay?
Yes.
Otherwise, we won't know.
Us. Okay, this is going to be coming in from TJ's account.
I'll do it. Just write her name, and then I'll type it in. All right. So it's going to. Huh?
It died.
You didn't charge it. Boris Musheyev. You guys see we're very advanced with our tech over here. BorisMTax.com. Boris. All right, guys. If you email my email was posted from TJ Tanjona, and I don't know how you say your name, TJ. I don't know what were your parents thinking. Okay. All right. Cool. Oh, you got her name?
Yeah.
All right. So one book is up. You need to put this inside here. So I guess we know. I mean, do however you want. You already said I don't boss around. I'm not bossing around. Just suggesting.
It's a good suggestion. You're right.
All right. Now let's see. What do we got here? Caleb.
All
right. Caleb gets the book. Ba-da-ba-bam. We got AirPods coming up. TJ, why don't you pick one?
Ooh.
Let's go, TJ. Pick one out. Ooh, I got same name again.
Carl Hens Amy.
Yes, guys, it's not that I can't read. I just can't read her handwriting. All right, so she already got this.
Yeah,
so sorry. Oh, just give it this. It's fine. You get one of these. Not give it to her. Just give things out. Just give the whole thing out. I don't know. Like outdated stuff anyway, sitting on the shelf. I'm kidding. All right. Let's see. Okay. Well, obviously she would get. Her name is like 15 times here. Amy. Which one did she want? She wanted this one?
Whichever one.
I send her everything.
I'll send you both.
Send her everything. Nah.
just please reach out to Boris.
Yep, reach out to that email.
at borismtax.com.
Caleb said thank you. You're welcome. Amy, can you say hello so I know you're here? Oh, Terry says great live. Terry's also on our team, guys.
You know, it would be cool.
No, it would not be cool to bring them here. All right, Terry. All right, Terry, thank you for the compliment. Now, please, can we go back to work? I'm kidding. All right. Let's see. What do we got? Amy says yes. All right, Amy, we're sending you two. All right. Now we've got, I don't know, what is this?
Jesus.
All right. So he's got what? He's got one of these.
He's got one of these.
These.
Yep. Well,
Yep.
I mean, you're giving away
send it to him. Guys, send us your address. So these are physical copies. Okay. This one is
a PDF.
A PDF. We're giving out the mugs too. Yeah, we said we are. Can't lie to people, Mariana. All right, Davai, you pick it out.
So for the mug, you're gonna let me know where to send it to. And Yin gets a mug.
Oh, Miss Yin Yang. You have to be a little more respectful to people. You got to write their last name too. Miss Yin Yang.
Miss Yin
Should
Yang.
ako, yeah.
Okay. So we're giving away how many mugs?
3.
3 mugs. Okay, next up for the mug.
I hope they don't cost a lot.
It's coming out of your
Hour.
Amy.
Amy again.
Amy gets
Woo,
a mug
you get a
too.
mug, Amy. Ali says, fingers crossed, also pick me. I would love the you get a tax book. Don't worry. Give
Just
it to
respond
her.
to our email.
Alice, you
send
get
us
the
an
tax
email.
book. Not yet. Write her name in here. Do you put their name? Are you putting their names in?
Oh, you know, let's just write the name here.
Yeah.
Well, okay.
Thank you. You're welcome. Oh, Miss Yin Yang says, woohoo. So, Miss Yin Yang, are you going to be an S-corp now? Let me know. I really want to know if this was helpful. All right.
Oh, we're doing more, right?
Well,
One more.
How many mugs?
One more mug.
Okay.
One more
and
mug.
Mr. Get me a corp tax
S-corp
book
tax
also.
book.
Me too. I want one outside the box. All right, guys. I'm going to get a lot of requests now. What do we do?
One more mug.
Can you? These people are asking. MSD.
They want a book.
MSD, just email me. Email that address. Deborah, just email that address. Just don't ask for everything in the world. All right. Well, one more mug?
One more mug.
Okay. Hello, Kanza. Okay. Caleb. Caleb also got a mug.
You get a mug.
All right, guys.
Now for the grand prize.
Grand prize.
Grand prize.
What are we doing?
Apple AirPods.
Oh, I thought you said MacBook. Oh, right. AirPods. All right, cool. Let's do this.
Oh, Deborah says, I already have purchased the other one and I found it helpful. Thanks.
You're welcome. You're welcome. Yes, the book was meant to be helpful. I'm really doing a good trying to,
pick it up.
All right, AirPods. Let's go.
Do the dance.
By the way, in order for you to get the AirPods, you making fun of me?
No, why?
What is going on? In order for you to get AirPods, you have to email that address, and Mariana is going to place an order online, and it's going to ship directly to you, okay? Here, we'll roll very cool. All right. You want to do this? Close your eyes. Don't cheat. I know you want to pick Amy.
Take out glasses. Really not cheeky. Not looking. Okay, who is it? Is it this way? This way, this way?
I'm not sure if this person is still here. Oh, no, because was this the question in the beginning? Mrs. Z. Anderson.
Woo!
Got AirPods. Let us know in the chat if you're here, because otherwise we're going to do another draw, because you have to email us. Mrs. Z. Anderson, let us know if you're in the chat. You have exactly 30 seconds.
Are you still here?
Let's go, Miss Z. Anderson. Let us know. The Yin Yang says she's converting to an S-corp. Maybe after I read the book. You don't need to read the book. Believe me. Okay. I hope Ms. Z. Anderson is here. We're going to send her the AirPods. She should be here. Maybe she'll watch the replay. Yeah. All right, cool. Congratulations, Ms. Z. Anderson. All right. Guys, if this was helpful, please let me know in the chat. Be like yes or something so we can push this. Oh, there she is. Oh, that's Adriana. Adriana, I thought you were Z. Anderson. This is, by the way, our bookkeeper, right? If anybody doesn't have a bookkeeper in their tax advisory, their tax advisor, you're missing out. We got the best one. Okay. Amy says yes. Okay. Cool. All right, we are good. How many of you are not subscribed to our YouTube channel? Please say no. We'll send you a link to our YouTube channel. If you're new or you just caught a live, I would really love to know how this whole algorithm works. We're going to be doing more of these. Yes, subscribe. Email address again. Email address. Just copy and paste it. Yes. Okay, TJ, I think we can wrap it up. Wait, let her put in the email address. Give it a second. All right. Thank you all very much. Until the next time, we're going to be doing more of this. Stay tuned. Subscribe to the channel. We're releasing an amazing YouTube video tomorrow. Thank you all for participating, and thank you so much for your questions.
Thank you. We'll see you next time.
Woo! All right. I'm clapping to myself.